Hi everyone, let's go over my Elliott wave scenarios on the Bitcoin chart covering the weekly, daily and the 1 hour time frames. Starting on the weekly time frame with the conservative bullish scenario where we are looking to finish a 5-wave impulse to the upside and create a bigger retracement to the downside. The common target area for your wave 5 is where we are at the moment, between 81.3k and 129k. In a more bullish scenario, we actually also look for a retracement, but afterwards a continuation to the upside to much higher prices. In this scenario, in the blue wave 1, we are looking to finish a more local 5-wave impulse structure, get a 3-wave corrective structure to the downside in 2, then continuation up. The invalidation is the low over here at 49k. On a daily time frame, both of these weekly time frame scenarios internally would have this 5-wave impulse structure. 1, 2, 1, 2, 3, 4, 5, and then 4, 5. Looking for one more high towards the upside with the potential for another 4, 5 if you want to count this as another 1, 2. In that case, you're going to see this before then a bigger retracement to the downside. But at the moment, this is your higher probability scenario. So in this case, what we are then looking for is a retracement to the downside in a blue wave 4. The common target area for your blue wave 4 is between the 236 and the 0.5 Fibonacci taken from the low of 2 to the high of your 3, giving you a target area between 96.7k and 83.6k. The invalidation for this scenario is 77.7k. Now, most commonly, your wave 4 is longer in time compared to your wave 2, and that is what the vertical line here represents. Preferably, wave 4 finishes after this vertical line, which is after the 30th of December. And this is a Fib time taken from the start to the end of 2 to the end of 3. Something that I like to note as well is that the white impulsive count here is actually a very nice impulsive structure. Your wave 1 in time and price is quite similar to your wave 5 in time and price, with your wave 3 being the extended wave, and that is also what you'd like to see. The more bearish scenario here on a daily time frame would be a finished impulsive structure, lower probabilities, but as an analyst you always need a bullish and a bearish scenario. So here we then have our 1, 2, 1, 2, 3, 4, 5, 3 finished here. This here is another 4, and then you have your final leg up in 5. In this case, you look for already a much deeper retracement to the downside. Now, the reason it has lower probabilities is partly because of your wave 4 here. As mentioned, wave 4 is commonly longer in time compared to your wave 2, or at least similar in time, and that is not the case here. This wave 4 finished on top of the 0.382 Fib time taken from the start to the end of 2 to the end of 3, which is like an absolute minimum target for a wave 4, but it is far from common for a wave 4 to finish on a 382 compared to wave 2, so it lowers the probabilities for this particular scenario. If we then go to the 1 hour time frame, then honestly the only thing that I am really interested in is the 0.618, because that is the level here that plays the most important role at the moment. Now, I'll explain why using two scenarios. So this is your bearish scenario, arguably. This is an impulse to the downside, and wave 3 is labeled at the low over here, as the highest volume was in the latest move to the downside. And it is most common in an impulsive structure for a wave 3 to have the highest amount of volume. So whatever happens here with multiple 1-2s and whatnot, you want to count this low as a 3, you'd still be looking for another 4 and a 5 in an impulsive scenario, then a 3-wave corrective structure and another leg towards the downside. The invalidation, however, is price moving up to touch the 618, which is taken from the wave 2 here to the low of a 3, sitting at 104.2k. Now, what we want to see in a wave 4 is wave 4 retrace to the common target area, which it has done, but then of course create a sideways ranging structure and then create one more low. We do have some support to the downside still here, this blue box, 96.6k to 97k. Now, the reason The 0.618 is so important is because if price moves towards the upside and touches the 618, the probabilities increase that this structure to the downside is corrective, not impulsive. And that is because the highest volume is in the low, which can happen in wave C's, wave Y's as well. It is very uncommon for an impulse to end on a high amount of volume. So therefore, the probabilities are lower to count this as a 1, 2, 3, 4, 5, and wave 5 on a high volume. Look for a 3 and another 5. Instead, if you move up to the 618, probabilities increase that this is a 3-wave corrective structure. Doesn't mean you can't go down, by the way, because a 3-wave corrective structure can lead to a double zigzag WXY, sideways WXY. You can have a flat structure, but that just quite simply depends on the move that you get to the upside, right? So once you touch the 618, what happens then? We'll be able to figure that out, but the 618 on the chart at the moment is very important. Do you touch the 618 first, or do you take the low first? Now for the bulls out there, if there are still any, this is your bullish scenario here. And this is a lower probability scenario because basically what this scenario would imply from a daily time frame perspective is that you are looking for a 1, 2, 1, 2, 3, 4, and then this is going to be a quite extended 5, and then you get another 4, 5, right? So inside this wave 5, you then have the blue count 1, 2, 3, 4, 5. And as mentioned specifically earlier in this video, in preparation of this explanation, in the daily scenario, at the moment, your wave 1 in white and your wave 5 in white are quite similar in price and time, which is ideal when your wave 3 is extended. If this becomes a 1, 2, 3, 4, and this is going to be an extended white 5, it's less common. So therefore, automatically, your probabilities on a local time frame here are lower for this scenario. Nonetheless, this would be then a wave 1 to the upside. You look for a 2 continuation up. Now, even if you're looking for a wave 2 here, then preferably a wave 2 ends after the 0.382 fib time taken from the start to the end of your wave 1, comparing 1 with a 2 in time. And the 0.382 is positioned on the 20th of December, which is tomorrow, 5 a.m. Central European time. Common retracement target for 2 has been touched. That is the 618 to the 786. 886 is very, very rare. That would lower the probabilities for this scenario even more. Your invalidation is the low at 94.2K. Now, we had some news yesterday, of course. We also have some news today, Thursday, December 19th here, 2:30 p.m. Central European time. Make sure you trade safe. It can increase the volatility. Unfortunately, I will not be able to actually live stream this time during the news because I have an appointment in the afternoon, so I won't be home. But I will live stream somewhere today, either before the appointment or after, but very likely after. So that would mean later in the afternoon or maybe even the evening. If we then look at the probabilities of the different scenarios in combination, of course, with the polylines, then on a weekly time frame, the probabilities are higher that we are looking for a retracement after the 5-wave structure on the daily, and plain simple, continuation to the upside without a retracement is on the number 2 position. It has the lowest probability. So what we're looking for in actually the more bullish scenario, and also of course your arguably more bearish scenario, preferably we look for a retracement to the downside, and then that retracement is going to tell us more. On a daily time frame though, right, which is the sub-degree structure of these 2 waves here, on a daily time frame, your higher probability scenario is this. So basically, for the weekly, after your 5 is finished, that is when you preferably look then for your bigger retracement to the downside. So if I then open the daily polylines, right, this is quite simple. Currently, your quote-unquote higher probability scenario, but actually the blue line is your by far highest probability scenario. The red line is just that most bearish scenario where 4 is already finished, 5 finished, and you get a deeper retracement. I could also add the more bullish scenario, right, where this would be your 1, 2, and then 3, 4, 5, and only then do you get another 4 and another 5. It's just that the probabilities are low, so arguably I could only have the blue line on the chart at the moment and be like, well, this is at the moment your highest probability polyline, right? So, and then on the 1 hour time frame, if we zoom in, then you can see, of course, a couple of lines. But the conclusion here is that the probabilities are higher to continue ranging. Now, my most interesting level is that 0.618 at 104 point something K. What was it? 104.1 K. So that is the most interesting level for me, right? That is basically the deciding factor on what line is going to be followed. But as you can see, in all of the lines, a continuation of the range has the highest probability, right? Now, as long as you don't touch the 618, arguably your blue line is most interesting. Once you do touch the 618, that is the moment where you would expect a continuation of the range in other corrective structures. So what I write here, keep an eye on the 618, probability is higher for an impulse down or an ABCWXY compared to the most bullish scenario of counting this as another 1, 2. Continuation of the range on the 1 hour has the highest probabilities. And then a general tip, definitely not financial advice, but something that I implement myself with regards to Elliott waves trading is that after impulsive moves to the downside on a high amount of volume, it is a good idea generally to wait for a range to form, as a range will give you all the information that you need for potential new positions, right? So that being said, I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.